I am a part of an organization called DOPE, doing our part through educating, empowering, and entertaining. So what DOPE do, we teach different classes, different subjects to high school students. We do so in a more energetic way. So today, again, when I call you, say something. Y'all don't want it to be boring. I don't want it to be boring. This is a give and take type of workshop. So we got 90 minutes to go over financial literacy. So a checking account is where you at the bank put your money into be able to use a debit card. So my account, my name of my account is Sir Woodenheim's report. I can't deposit dope checks to my bank account. So I have to put them in Dope's account, it's the business account, right? And the government is really particular about that commingling of funds. So if you're doing stuff for your business, it needs to be out your business account. If you're doing stuff for your personal, it needs to be doing stuff out your personal account. And savings accounts, the purpose is to keep the money in there and not be able to pull it a lot all the time. They will charge you penalty fees when you pull the money out prematurely.
Savings account is the money that you set aside for when you need it or when you want to go shopping or anything like that. You have extra money on the side to do that.
You'd say to like keep your money in a savings account is like what you use when you actually like need something.
For that 9 months, the bank will then give you, let's say, 5% interest on that. You cannot touch that money. They're taking that $50,000 and they putting that money to work. They're playing in the stock market, they living off other loans, car loans, mortgages, whatever. So that's how they give you more interest because you are committed to not touching that money for that period of time. You talk about the 50, 30, 20 rule.
60% of it is literally just for stuff you need. For example, hygiene products, housing, like necessities. 30 of that is just for like everyday spending, like fast food, getting your hair done, your nails done, everything else. And then 20% of your money goes into your savings.
Good job, good job. So yeah, that's how you split your money up. So every time you get some money, think about this rule. Look at credit cards versus debit cards. I pay my balances off every month. I don't roll over, so I have to pay the minimum payment, stuff like that. But you have to be very, very disciplined to do that. So just have to be very, very disciplined with credit cards. But I know in our community, we are taught credit cards bad. It's used for like emergency, and that's just not, that's what I'm trying to teach you guys now, the proper way how to use credit cards. So that way you can be a good steward of that money. It's not likely anymore, but you should know how to read as well as fill out a check. Okay. So on the check, there's multiple parts on the check that you need to look at. The first part here is the check number. The upper right-hand corner is the check number. So that's important when they have a check because when you have a checkbook, all of them have different numbers. So the check number will be there. So every bank has a routing number. What a routing number is, this is where the financial system knows this is this part of this bank. So Bank of America has a routing number, Chase has a routing number, maybe Federal has a routing number. All institutions have their own routing number. This is how the FDIC understands this is where this came from. Now we're going to fill out credit card slips. So when you go to a restaurant, how do you figure out what you need to put out for a credit card slip? They give you a slip to fill out, right? Company will call the restaurant. Hey, on this day at this time, do you have a credit? So they pull it up. Yes, Taniqua ate here. She paid the money. This is a good one. So then that's a felony. Credit card fraud is a felony. So that's why the restaurant keeps those slips to ensure that, no, this person did eat here. Okay, credit score is very, very important. Credit score is going to help you to save money in the long haul. If your credit score is bad, you pay more money than most people to do stuff. If your credit score is good, you pay less money.
I heard that it's easy to get like messed over with using a credit card, but also you really can't like get mortgages or loans without having a credit card and having a credit score.
We do not share our credit scores with people as friends, mama, ask, hey, can you co-sign, say on the vehicle for me? No, we can't. This is your credit score. Again, you make sure that you protect it at all times. When you get a loan, it's not free money. So all loans have interest attached to it. That's how that bank gets their money back. So if I loan you $10,000 and I charge you 10% interest, how much do I get back at the end of the loan? So investments is like savings, but more higher risk. So investments pay more. What's the expression? Higher the risk, higher the reward.
If you let your money stay in your savings account, you aren't earning that much as opposed to put it in like a a mutual fund or a CD though.
$1,200 a month in rent. For 1 year, you didn't pay $14,400 in rent, right? But if you were actually buying this house, now you have equity. I'm gonna go over that in a minute. My house went from $225 to $465 in a matter of those couple of years. And it's like, that's real equity that you can see. If I rented an apartment or something like that, I wouldn't be able to get that money that I got. I use that money to then build the house that I have now in Dallas. Make sure you purchase life insurance. You do not want to do no fish fries, no GoFundMe accounts when you die. That's the easiest way to make a lot of money and pass on wealth is if you have a life insurance plan called Dope, Living a Dope Life, which kind of takes all the stuff that we've learned today and we put it in the fun board game edition.